Yo, what is good, fellas? Today we are going over deviation. Holy shit, I write ugly. Deviation. Today we're going over deviation. I did ask in my Discord if you guys would prefer a video on initial balance, which I'm going to go over now, or a golden pocket or introduction to Fibonacci. Now, most of you guys wanted initial balance, but then I thought I might as well do a little combination and just do a little series on this. So today's going to be deviation part 1, where I basically just go over what deviation means, how to use it, how to see it in the market, and then I want to go over initial balance. How that works, where you can spot it, indicators you can use, how you can trade it, how you can use it on the lower time frames to find entries, how you can set your stop loss, how you can set your take profits, and yeah, basically just go over everything you need to know about initial balance. And tomorrow I want to do a video on previous day high and previous day low deviations, because that is also an incredibly good setup. I think we even had that setup today, if I'm not wrong. And yeah, like, these setups are incredibly good. So let's just get into it. Initial balance is essentially the high and low created between 9:30 and 10:30 a.m. New York time. If you don't know how to find the time on your chart, that's New York. That will be down here, and you go to UTC -5 New York. All right. So now that we have this, how do you find the initial balance? Now you can be a old guy and mark it like this. Like, wait, how do I find this? 9:30. So between here and here. Between these two, it's the high and low that is created. Alright? So the lowest point that we went between 9:30 and 10:30 a.m. will be this low and this high. This is our initial balance. Now, if you don't want to take the time to do that and try to find all that yourself, we do have an indicator. It's called IB, and you can find it like this. I'll show you guys how to find it. IB, initial balance. I think it's this one, if I'm not wrong. Never mind. Never mind. Or is it? I don't know. Just, it's an initial balance indicator. It should be. I'll just link the one I'm using in the description so that you guys can use it. And yeah. So now that you know what initial balance is, it's pretty fucking simple, right? The high and low created between 9:30 and 10:30 a.m. Now, how do you use this? What kind of information does this tell you? Well, you can use it two ways. So number one being looking for a liquidity sweep. You guys have seen a liquidity video, so you know how to find a liquidity point. So it would look something like, well, what we had today. Basically just a tap into the level, like this, bang, and then we just start going up. That's basically what a liquidity sweep will look like. Something like this. Right? That's basically what we had today. A nice little liquidity sweep of the initial balance. I'll just draw this up so it's easier for you guys to understand. So let's say this is the initial balance. We had the low form, we had the low form, we had the high form, and then we're just ranging. Now, the two ways to trade it is number one being liquidity sweep, and then number two being deviation. Now, what is deviation? Deviation essentially means trapping breakout traders. It's that simple. So it's basically going to be, how do I explain this? It's essentially just a false breakout. It will look something like this on the chart. Let's say this is the initial balance here, and then we have a breakout of this high, right? But then we start to consolidate above these highs, essentially just trapping the longers who's trying to trade breakout trading, who's trying to force a bullish trend. Most breakout traders will either enter longs the moment we break above this, or enter longs the moment we tap back into the initial balance high. But what the market makers usually like to do to fill huge amounts of orders is wait for this break. Wait for this break, and the moment that all of these traders start entering into longs, they start filling their short position, right? Because now that they have millions of dollars trying to go long off this breakout, they are filling millions and millions and millions of dollars of short orders trying to go the other way. Now there's going to be many times where we just deviate like this, where we just consolidate, and then tap the initial balance high and then go for the longs. But a way to confirm that this is actually a bearish deviation is going to be waiting for a loss of the initial balance high again. Now what does a loss mean? It's basically a strong momentum candle that goes back below the initial balance high. Wait, let me just delete this. Which will look something like this. So this is initial balance high. And let's say we're consolidating. We have super low volume on the charts. Essentially just consolidating above. The moment we start gaining a little bit of volume, a little bit of momentum on the low time frame, and you see that we start breaking below this initial balance high and getting some closure behind this initial balance high, that's what your entry trigger will look like. Literally just strong momentum, strong volume right below this initial balance high. You don't want to see price go into initial balance high like this, where it just chops and then it chops on the initial balance high like this and goes up a little bit, goes down a little bit. This is not something you want to see. This is not clean deviation. A clean deviation would look exactly like I've drawn up here. Break above, wait, let me show you. It will look like this. A break above, a really good setup would look something like this. Break above, consolidate, probably even tap the initial balance high. But then we take out either this or this liquidity. Like this. Sweep that, and then you see volume start kicking in and losing this initial balance high with high volume. And when you see these strong closes back below initial balance high, that's when you start looking for your short entry. Now, I like to be very aggressive with my entries and my stop losses. So I will usually go for a 20 to a 30 point stop loss. This is a imaginary stop loss, by the way. This really depends on the setup and how it looks. But I like to go for, let's say, 25 point stop loss. And then I'd like to just target the initial balance low as a full take profit, but I'll obviously take partials on the way down. But the more safe way to go would be to probably have your stop loss above the sweep or at the highest point that we got before breaking back below the initial balance high. But like I said, I like to go for higher risk, higher reward setups. So I will obviously then have a tighter stop loss trying to gain maximum RR on my charts. But if you like to have a higher win rate and a lower RR, then you'll obviously take your stop loss and have it above the high, as it's the most safe and most, well, best way to do it. Now, I did low-key just realize there is not 2 ways, but 3 ways to trade this. There is also continuation. This is essentially who we're trying to trap, but like I've explained in my microstructure video and my other videos, if we have a clear structure trend, or a clear structure, clear trend, clear everything is pointing towards longs, you're seeing huge bullish... wait, why am I fucking explaining it now? I'll just explain it when I get to it. So, I just wanted to say this before it was too late, because I was editing my video and seeing I didn't mention it. So, you have this initial balance, right? Here. What you want price to do is when it deviates, you don't, like, any deviation doesn't mean a good deviation, right? We can deviate under anything and go up and then just chop and then go down. What you want to see, even though you get that strong momentum, you want to see the strong momentum come from somewhere, right? That's why we've learned all these confluences. So what you want to see is when we go down here, you want to see us deviate into some sort of key level. This being, for example, that we're in discount, that we are tapping into a fair value gap, that we are tapping into liquidity, we're tapping into some sort of thing that would make us want to go higher, right? That would make this setup so much stronger, and will make this setup so much stronger, because then we see a reason for us to have this V-shaped recovery back up above the initial balance low. And the same way, other way around. I just wanted to say that real quick. And I also low-key want to go over this, because I forget doing it in the video, where I talk about continuations, and when you can look for a good continuation of the initial balance high instead of a deviation. So a deviation is, well, we've talked about it now, right? It is just a small consolidation above initial balance high or initial balance low, which looks like this, right? But when we don't do something like that, we'll usually do something like this, where we just continue down. that means the trend is very strong. So what do you want to do then? Then you can start looking for these retests of this to continue shorting down. And same thing bullish. If it's going like this here instead. Like when it starts to get overextended above the initial balance high, that's when it's starting to go from deviation to continuation, right? That's just a flip and a retest of the level, if that makes sense. It makes sense. You guys get what I know, right? You get what I'm saying, right? I just wanted to say that. But yeah, anyway, so safe stop loss, nice. Next up, how can we identify this, for example, on the bearish side? Like I've said in every single video. Vice versa. So, what will it look like? Initial balance. We get the high, we get the low, and we get what? Deviation. Trapping who? Trapping who? Trapping who? Breakout traders. They try to short, and we just bang, right? What's the deviation here? This box. It's basically a, if you're familiar with ICT or if you're familiar with just trading terms in general, you will know what AMD means. It means accumulation, which would be this part, because we're going sideways, right? This would be accumulation. All right. Sorry. This will be accumulation, right? This would be manipulation, okay? And this would be distribution. That's essentially what AMD means. And accumulation, where we just accumulate orders. Manipulation, where we manipulate the lowest or the highest point. Go down, accumulate below, or just sweep below, and then we distribute. So accumulation, manipulation, and distribution, which would essentially just be something like this. This is essentially what any initial balance deviation setup would look like too. It's just an AMD setup. It's just an accumulation where is the initial balance, which is a fucking swing high to a swing low, and then we have a manipulation above either the high or the low, and then we have a distribution in the other direction the moment we get confirmation by strong momentum closing through the initial balance high or the initial balance low. I know it's going a little bit fast here. I know I'm fucking falling apart myself, so I wouldn't blame you guys if you are too. Now let's get into some examples. I can easily find some fucking examples here for you guys. For example, today, this was a good example of a liquidity sweep. But, not a good example. Because, I mean, we got the sweep, but then we just started chopping. So it's no clear directional entry for you guys. This is like, when we would like to enter here, we would probably enter after the sweep. So, and when we close back above, so this would probably be this be the entry. This would probably be the stop loss, and then you'd target like initial balance high. You'd probably get a TP out. I'm going to make a video soon about take profits and stop losses as well. So this is also going to make sense to you guys soon, I promise. But it's mostly about liquidity points. So this could be a potential take profit. This could be a potential take profit. This could be a potential take profit. And then it's this, which is the obvious take profit, right? Your take profits is essentially where you want price to go before price wanting to reverse, if that makes sense. I'll get deeper into it when we actually make a video about it. But for now, that's all you need to know. That could be a potential entry. It's not a good one because, well, the moment we entry, we start to chop. And this is not what you want to see when you trade initial balance. When you trade initial balance, you want to see momentum. You want to see big candles, big volume, not some fucking sideways price action. This is a bad condition to be in when you trade. All right? Next up. I mean, this week is a bad example because we've had so shit fucking price action. This is potentially the only good deviation we've had. All right. So here you can see we have the initial balance, right? 930 to 1030. All right, this is our initial balance. So we also see we have what? We have accumulation, we have manipulation, and then we have what? All right. And what can we, I mean, this is not A plus tier setup, but this is more like a mid tier setup where we can target a scalp long kind of to just the, I'll get into it. So first reason this isn't the best trade is that we've already taken out the highs for the session, right? So we've already taken out initial balance high. So that removes our kind of main take profit. That removes our main drawn liquidity for where we want price to go. But we see that we get a heavy dump of it with no retracement. We only created a lower low without setting a higher high, meaning that now after we deviate below the initial balance low and we manipulate into liquidity like this, this is 1 minute liquidity, by the way. Let me go on the 15 minute. Ooh, where were we? Here we go. And liquidity like this. And not only that, but we also tap into this 15-minute fair value gap, which is also a what? A 1 hour fair value gap, which is also a what? A 4 hour fair value gap. We talked about this yesterday, right? And not only that, but it is also in what? Discount of the range. You're starting to get it now. So we have everything we need to see a clean manipulation leg or a deviation leg, which we would call it here. Right? So now everything is pointing towards that. We are now starting to fill buying orders, right? So breakout traders are seeing this ginormous fucking red leg and they're like, ho, now it's time to get some continuation trades going. But no, the market makers are going to straight up your asshole if you try to do that. So what do we see? We see us just chopping below. We see consolidation, and then we see big candle down and a big retracement up. That means we reacted from something. That's the 4 hour fair value gap. That's all this liquidity, all this built up liquidity. That's, we are in discount. Basically the market maker is saying we have a good opportunity to buy here. Now where do we see our entry trigger? Right? So deviation. And you're starting to see these big candles, big momentum up, okay? So what do? You wait for this close. This is your entry trigger. When you see this green candle close above, and it, like the entire leg is just a V-shaped recovery, that's what you love to see when you trade stuff like this. So your entry would be this green candle close with a, in my option, it would be a 20-point stop loss. I wouldn't really want to see us lose this again, because like I've said, you want to see big momentum, you want to see this trade play out fast, you want to see straight up. You don't want to see chop, you don't want to see down candles, you just want to see straight fucking dildos to the upside towards your TP. And well, that's what we got. So what would you target here? Considering we have taken liquidity, we have flipped to bearish market structure, what we'd like to target. What I would like to target is, well, the discounted area of the leg down, which would be this. So this would be then a 3R setup. But yeah, this is just an example of a scalp you could take or something you could take when you see opportunities like this present themselves. Now you can also see that this trade, if you would have taken it, it could have, like, you could have also done like this and targeted the highs. I just see it as a more risky play, but it did play out. It just took some time to play out. You could have also had a tight stop loss and see this play out for a way higher RR. But yeah, this is just like an example of a good trade, good deviation, a clean deviation, and a clean V-shaped recovery showing good strength. This also a decent deviation. I'm not going to get into what we were reacting off, because I don't really care. I'm just going to show you guys the deviation. So we have our initial balance between 9:30 and 10:30. We create our low and our high. Can you guys see what we do above that high? We deviate. You guys are starting to get it now. You're starting to see it now, right? We just strong break through, consolidate, strong break below. And what do we do when we see a strong break, strong momentum? We market enter. And what would I do? 20 to 30 point stop loss. And what would you target? The equilibrium of the current trading leg, which would be something like this, which would be this low right here. Now, it obviously didn't play out, but it's just an example. Like, this isn't going to... Nothing has 100% win rate. It's just, you probably would have gotten a partial or just stopped out break even, to be honest. But yeah, I'm just going to continue printing these examples. Like, these are all trades that I have probably taken. Here too. What do we see? High gets created, low gets created, deviation above. You see these strong volume candles, and they always happen on these initial balances. Like here, when you see this strong ass candle, you just, okay, that's all I need to see. You see that big volume? Bang. 20 point stop. That would be above this high now. What can you target? Well, these lows would be a good first target, but I'd probably target all the way down here. Didn't play out to full take profit, but it would have at least hit a partial, and you would have gotten some money out of it. Again, I'm just showing you guys examples. These are daily examples, by the way. I'm just scrolling over on the chart, just showing you guys what's happening. I'm seeing this live together with you guys. But yeah, anyway, I'm just going through these like quick. I'm just showing you guys. And this is an example of liquidity sweep, where we just sweep it, strong momentum down. I'll probably enter here, stops above the high, and then just follow it down. Like I say, if you see a sweep, strong momentum down, then that's your entry trigger. And these aren't high probability setups, but at least it's like setups, you know? These aren't going to win every time, but they are going to win more than they lose. Especially if you know how to use them. Like this, for example. This is a good little range. This is a good little deviation. Like here we have a clear range, a clear established low, a strong deviation below, like a strong break, and we have enough time below this where it actually looks like a deviation, and then we have a strong break above it again. Now, this one would have taken some time to play out, but it played out. Like, you would have probably entered around, let's say, here. And you always want to have your stop below the initial balance low. So, if you have strong volume days where the 20-point stop loss doesn't work, well, you want to up your stop size, right? You want to match the volatility that we're currently trading. And you always want to cover at least the initial balance low. So if it's like we get a close up here, then it's like you would rather wait for something like a retest. But let's say you entered on this, all right? Let's say you entered on this close when you saw the strong momentum. You want to cover at least the initial balance low with a couple of points. Because you can see retests like this, where it's like break below, break above, break, and test this once again, and then a pump. So, yeah, here, bullish momentum, target, for example, this. Now, I'm not saying you probably would target this. I'm just getting into the examples. Just trying to show you guys how these work, what you can look for. Because you're not going to have me by your side when you're trading these alone. So I just want you guys to understand, like, at least these thoughts about how you can enter these trades, how you can look at these trades, what you can look for. Just all the basics around them. And yeah, that's basically it. That's basically, I'm not going to go over like 100 examples. This is just something that I want you guys to get the basics of. I just want you guys to understand how this works, why it works, you know, all the good stuff. Now, later on in this bootcamp, I'm going to go over how you can backtest. That's when you can strike in with these strategies and really test the data behind them. Test how good they work, how good you can trade them, how you can make your own strategy out of trading this, and all that good stuff. So yeah, thank you guys for watching day 10. Day 10 of the wall. Tomorrow, we are going to get into, or actually, I've explained so much about how these deviation trades work. I don't know if there's even a point of me making a previous day high or previous day low deviation video when I already have a strategy video on that. So I'll rather just upload, or I'll rather just put the previous day high and previous day low video linked in the description below, so you guys can go watch that if you want. And then I'll get into, let's see, I'll get into Fibonacci tomorrow. So then we're going to talk about golden pockets or TR pockets, and just what Fibonacci is, how it works, all that good stuff. And yeah, so thank you for watching. Hasta luego, my amigos.